Hi, this is Russell Sands. Want to welcome everybody to my turtle webinar. You should be able to see a picture of me up on the screen. This is actually me a couple of years ago. I've gotten older and better looking since then, but you know, a turtle is a turtle. I'm not sure how many of you are familiar with the turtles. We've been around a long time. We started in 1984. So let me give you a 5-minute background about who the turtles were or who the turtles are. And then I'll tell you about myself. And then I'll tell you about my trading style. The turtles were a group of traders that were formed in Chicago in 1983 and 84. There were two very famous, successful traders named Richard Dennis and Bill Eckhart, and they had a disagreement about whether or not trading was something that was a natural talent or whether it could be taught. So what they did was they went out and hired a bunch of people, of which I was one of them, people with different levels of education and background and experience. And they brought them all in a room, sat us down for about 2 weeks, taught us all their trading methods, and then gave us money to go out and trade. And back then it was just the commodity futures markets. Since then I've been expanded to trading things like stocks and options and currencies, but I'll get into that a little bit later. But for right now, it's been 33 years that the turtles have been trading futures. I use the term futures and commodity futures sort of interchangeably. Everybody who joined the program, and there were 12 or 13 people the first year, and then we all did so well that they took in another class of 8 or 9 people the second year. Everybody did really well. About half the people are still around trading today. Some have retired, some have gone to do other things. I'm one of about 8 or 9 turtles that are still trading and still managing public money for other people, still teaching. I teach seminars, I teach webinars every now and then, of which this is the first one this year. Obviously, the last time I did one was last April, I think. And so I'm going to give you a little bit about how we trade, what we trade. Hopefully, you'll get excited about it to want to follow my methods. And we'll talk some more later about how you can do that. For right now, all you really have to know is that I was one of about 1,000 people that sent in a resume to Richard Dennis. I didn't really even know who he was. I had very limited experience trading. I had gotten my MBA from New York University. I was working on Wall Street as a stockbroker. I did have a little gambling experience. I played poker and blackjack and backgammon, all of which is extremely important to trading because it's the same skill set of discipline and concentration and money management, whether you're playing cards or trading the markets. So the combination of my educational background and my gambling experience was one of the things that struck a chord with Rich Dennis and Bill Eckhart. And so out of over 1,000 people that sent in resumes, I was one of the 12 people that was hired. I was living in New York, working on Wall Street. I had basically a couple of weeks to pack up my bags and move to Chicago in the middle of the winter of 1983-84. And that's how I got started. I sat in a room with a dozen other people. We listened to Bill and Rich and some of their partners and their brokers and their friends explain all their different trading styles. We went through about 2 weeks of classroom instruction, and then Rich and Bill gave everybody some of their own personal capital and gave us trading accounts and told us go ahead and start trading. And basically that's what I've been doing for the past 33 years, pretty much, full time. After about 10 years or so, I got to the point where I was able to do it well enough that I thought I could go out and teach other people. So I started writing a newsletter. I started teaching seminars. I started writing an advisory service, which I'll show you again in a little while. And that's branched out into my the other half of my business. The first half we'll call my trading business, and the second half we'll call my teaching business. And hopefully that's why you guys are here today, for the teaching business. So this is a little difficult talking to a general audience because obviously all of you have different levels of background and experience in the markets, different account sizes. But again, that's the same thing that I experienced sitting on the other end of the room 33 years ago. There were 12 people, some of whom had higher educational degrees, some of whom barely made it through college, some of whom had trading experience, some of whom had a little, some of whom had none. And Rich and Bill basically just started from the beginning, assuming everybody didn't know anything. Or actually, they told people, whatever you know about trading or whatever you think you know, just forget it because it's probably wrong. And even if it's not, it doesn't matter because we're going to teach you our methods, and that's what we want you to do from now on. So just forget everything you learned before or you think you know, and we're just going to start from scratch. And that's basically the way I teach. Same thing. I assume that nobody knows anything about the markets. So I start with the very basics, explaining, what a market is, how it moves, how people buy and sell things, how you make money. And quite simply, making money trading is basically just betting on whether something's going up or going down. If you think it's going up, you buy it, and if it goes up, you make money, and if it goes down, you're wrong and you lose money. If you think something's going down, you sell short, and if it goes down and you're right, you make money, and if it goes up, you're wrong, you lose money. So buying and selling are two opposite sides of the same coin. A lot of people who just have stock market experience and are used to, shall we say, investing in the market don't understand that you can make money on the short side just as easily as you can make money on the long side. If you buy something at 40 and a year later it's up at 100, you've made 60 points. Conversely, if you sell something short at 100 and a year later it's down to 40 and you buy it back and cover it at a cheaper price, you've also made the same 60 points. And what's funny, for the past 10 years now is everybody really complains about how the markets were horrible in 2008. We had a banking crisis, a mortgage crisis, a financial crisis. Stock market got cut in half. Everybody got killed, or mostly everybody got killed. I had my best year ever in 2008 because I was short everything. I was short the Dow Jones from 10 or 11,000 down to about 7,500. I was short crude oil from over $100 a barrel and covered it at $42 a barrel. So I made a lot of money on the short side. So you can make money being long, you can make money being short. Markets go up and down all the time. And the trick, I guess if you want to call it, is just to know when markets are going to go up and when markets are going to go down, and whether you should buy or sell them appropriately. Now, the way we were taught to trade, which I think is a lot better than anything else, there were about 40 or 50 different commodity markets. There are large brokerage firms and research firms that have research departments and analysts that just follow all the fundamentals of whether it's bonds, they follow economic reports, or whether it's soybeans, they follow crop reports and agricultural reports. And that can be a full-time job. And that's not really what I do, because I don't have time to follow all those markets. It would take me an hour or two a day just to read up on each one. And I trade 40 different markets, so obviously there's not enough time. What I do, what we were taught to do as turtles, is more something called technical analysis, which basically just means looking at the charts and deciding on whether or not something is going up or going down. And if the chart looks like it's going up, you want to buy it and hope it keeps going. And if the chart looks like it's going down, you want to sell it and hope it keeps going down. And that's basically what trend following is all about. It's not rocket science. It's just looking at a chart and tell me if it's going up or down, and I want to jump on board in the right direction and just ride along. I have no idea if a trade is going to work or not, how far it's going to go up, if or when it's going to turn around, how much of a profit I'm going to make or how much of a loss. You should be able to see a lumber chart right now. Every one of these bars on the chart is a daily bar. So it's a daily bar chart. That's what we trade off. You can see pretty clearly for about the past week and a half, this market's been going straight up. I really don't know why, and I really don't care why. There was, if you talk to fundamental analysts who want to find reasons or explanations or whatever, there was a housing market report early last week that was sort of bullish for housing starts. So common sense, for lack of a better word, will tell you if the housing market's booming, the lumber market should be going up. I think that's very simplistic. I don't really pay attention to it. I don't really care. All I care about is looking at this chart, noticing that it's going up, and after it's gone up for a certain amount of time, a certain number of days, or a certain number of points, I decide that the upward trend is potentially valid. So I enter a buy order and I get into the market and I get on board. Once again, not knowing if I'm going to be right or not. But the trick to trading is when you trade this way, you get on board, and if you're right, you could get huge trends. You hold on for as long as possible, make a lot of money. And if you're wrong, you have money management rules in place to tell you when to cut your losses if you start losing money. And the very simplest rule for that is on any given trade that I get into, regardless of whether it's a long position or a short position, regardless of whether it's a stock or a commodity, or regardless of what I personally think about it, if I put on a trade and it starts going against me and I lose 2%, of the value of my account, then I get out. That's my money management hard stop, 2%, and I cut my losses, and I get out, and I say, okay, I guess I was wrong. Looking at this lumber chart, we have entry and exit rules based on a chart pattern of when to get in and when to get out. The simplest entry rule is we want to buy something when it goes higher than the highest high of the past X number of days. In this case, we'll say 20 days. So right about here on February 1st, when the market went above 340, which took out that old high, now all of a sudden it's been higher than any point it's been in the last 2 months or so. And that was the time to buy. And that was the time we got in. So I bought it on February 1st, bought lumber, told all my advisory subscriber clients to buy lumber, immediately calculated how much of a 2% loss I would have to take, how far it would have to go down, probably somewhere down around there, and then I would be wrong. Luckily, in the past 6 days, it's done nothing but go my way, and I've got a very nice profit in this trade so far. Basically, I got in at about 340. Now it's about 370. That's 30 points. That's about $3,000 a contract. Now, where am I going to get out of this trade? I have no idea. It could go to 400. It could go to 450. It could turn around and go down tomorrow. Hopefully, since it was limit up today, I expect at least one more day of continuation. But I really don't know. All I know is I'm going to stay with this trade as long as it keeps going up. And if and when, or whenever, because there's always eventually a whenever it turns around and starts going down, my exit rule is going to be if it goes down for X number of days, and let's say it goes down for 10 days in a row, or it goes down lower than the lowest low of the previous 10 days or 10 bars on this chart, that's when I'm going to get out. So right now I have no idea where that is. I can count back 10 bars and I'm basically looking at down there, which means I'm potentially risking giving back all the $3,000 profit that I made so far, plus letting this trade turn into a loss. Now, I know some of you people out there are probably shaking your heads and going, that can't be right. And I guarantee you that is exactly the right way to trade. And I'll tell you why, very simply. Most people who trade lose money. I'm sure you know that. I'm sure you're looking at yourself or in the mirror or looking around at everybody else. And that's how people trade. Most people lose money trading. And the reason most people lose money trading is because they get excited when they see their profits and they want to take their profits, and that's the wrong thing to do. Trend following usually does not work. Most trends don't work. They crap out, and you wind up taking a lot of losses. So the only way to make money trading is the few trends that turn into good ones. You want to ride them as long as possible and hold on as long as possible and make as much profit as possible on those trades to pay for all the losses. And the only way you can do that is just hold on until the market turns around. Now, right now, this market could turn around and go down for the next 10 days, and I'd feel pretty lousy giving back my profits. But then again, if the market just went sideways for another 4 or 5 or 6 days, Then 10 days lower, I'd start locking in my profits. It goes here and here and here and here and here. Then by the time it gets 10 days lower, it's still going to be above where I initially bought it. And that's how I'm going to make a profit on the trade. So basically, those are the 3 entry and exit rules for all the trading that we do. And we'll break it down and we'll simplify it very much. Say, buy a market when it makes a higher high than the past 20 days, or sell short a market when it makes the lowest low of the past 20 days. Hold on until you either have a 2% loss on your account or until you have the market turn around on you and go 10 days in the opposite direction. And that's where you get out. Now, the good thing is that it's very easy to figure out where that's going to be in advance, so you don't have to sit and watch the markets all day. You can put stop orders in and just go about your business. We used to tell people it only takes me about an hour a day to trade because I look at charts like this and I figure out where my stops are going to be. I tell my brokers where my stops are, and then I don't have to watch the markets all day. I can go about my real job if I have a real job. I can play tennis. I can sleep late. I can do research. I can talk to other traders. I can do whatever I want to do. From my point of view, I run an advisory service that if you sign up for that, I will tell you every night in all the different markets that we trade what positions we have, where we got in, where we are going to get out. So you don't have to do any work either if you don't want to. I'll tell you what to do. And you can have your broker do this automatically also, so that even you don't have to watch the markets. In fact, when we send out the advisory service every night, which I'll show you in a few minutes, we send it out to all the brokers. I'd say 80 to 90% of the people who subscribe to the service give their brokers a letter of execution or a power of attorney to follow the trades according to what I tell in my nightly advisory service. And people just follow along and watch their accounts every day, and they don't really even have to do it. So this is a lumber trade right now that we're going to hope keeps on going. And to give you an example of what a good trade would look like if it did keep going, this is a cocoa chart. Hopefully everybody can see the cocoa chart now. It's going down, obviously. It's been going down since the summer, since about the middle of August. This trade has gone down and made over $10,000 a contract, and it's still going. There were a couple of times where it looked like maybe it was going to fade out and turn around and start going back up. Right here it went sideways really tight for a long time. Right here it started going up a little bit. Right here it started going up a little bit. You guys can see this chart. Somebody just type in and say yes or no that you can see where I'm pointing my arrows. But basically it never went more than 10 days higher, which means we never got stopped out. And we're still in this trade. We've been short cocoa since the middle of August. And like I said, making over $10,000 a contract. So if you have a trading system where you're going to make potentially $10,000 or even $5,000 on a few good trades, and let's say you're going to lose 2% or $2,000 every time you're wrong, you don't have to have that many winners. You can have more losers than winners and still wind up making money. And that's exactly what trend following is, and that's exactly what turtle trading is. And it's really, really hard psychologically for most people who want the the positive feedback and the justification of saying I was right. But, you know, you got to get, we were taught this very early, you've got to get used to losing. You've got to get used to losing more often than winning. It gets depressing sometimes. I can go for 3, 4, 5 days in a row. I can go for 2, 3, 4 months in a row of net losing days and not get discouraged, because I know I'm going to have something like this cocoa chart come along every now and then, and that's going to pay for all the little losses that I take. So that's why most people lose money trading. They don't have the discipline or the intestinal fortitude to stick with the system that disappoints them most of the time and loses money most of the time. And the 10 or 20% of the people that can do that, they're the ones that are going to make all the profits at the expense of the 80 or 90% of the people that can't do that. So there's no secret to it, really. It's just knowing the rules, like I said, buy or sell when it goes 20 days higher or lower, exit when you lose 2% of your money, or else stick with the trade until it turns around and goes 10 days against you. Those are the same rules for every market, for every commodity market, for every stock, for every equity, for every foreign currency that we trade. They're all the same rules. So you don't have to know that much. You don't have to figure out things. You don't have to do a lot of research. You just have to have the discipline to follow the system. You don't even really have to figure out where those entry and exit points are, because I will tell you if you want to sign up for the service. You just have to have the discipline to follow it. A lot of people think they do, and then they call up their brokers and second guess themselves, or they second guess me. I'm not the smartest guy in the world. I don't know the secrets to the markets. I just know that I learned a system a long time ago, and it works. And I had positive feedback in the sense that, first of all, I was taught it by a guy who made hundreds of millions of dollars, so he must have known what he was talking about. And second of all, I made money the first year trading, and so I had positive feedback doing it that way. And I figured, okay, this must work. And I've been doing it for 30 years. I've had my momentary lapses of discipline, questioned my system during long losing periods, always wound up feeling sorry that I did that, and always came back to being a good little system trend follower. And again, not knowing or caring why the markets are going up or down. This cocoa chart, for example. I've seen fundamental news reports that say most of the countries in Africa have been experiencing very good weather this year. They've got very good large crops. And of course, everything is ultimately based on supply and demand. So in lumber, for example, if you've got a strong housing market, there's going to be a strong demand for lumber to build houses. So that's why lumber is going up. In cocoa, if you've got a large supply because you've got perfect weather and bumper-sized crops, you're going to have large supply and the price is going to wind up going down. Now, maybe that's 100% of the story. Maybe that's 50% of the story. I don't really know. I mean, those are the stories about lumber and cocoa. But again, I don't really care. All I care is what the market's doing, and I care that I want to get on and follow along. Now here, we're looking at a stock market. This is, well, actually it's an ETF. It's the QQQs, which is the ETF for the NASDAQ. Okay, I can put up the NASDAQ futures chart. There's the NASDAQ futures. It's basically very, very similar. There's the Qs, which are an ETF, and we trade those also. And it's basically the same thing. This market has been going straight up pretty much since the election. You know, whether or not Donald Trump as president is going to be good for the stock market. Apparently the stock market, or most people on Wall Street, think so because he's business oriented. He talks about doing away with a lot of regulations. He wants to make America great again. And one of the great things about America, one of the ways you define a great thing about America, I guess, is having a bullish stock market. So here we go. This is a bullish stock market. There's the Dow Jones, basically the same thing. Look where it started. Right there, November 7th. That was election day. And it's been just shooting up ever since. What's funny is you look at this chart and it looks like we just went straight up since the election. But, you know, the markets are funny. The markets are funny in the sense, here's the futures of the Dow Jones, okay? Look at this line right here. Everybody can see this big line that goes all the way down and then comes back up, right? Actually, tell me if you can see that, so I know everybody else sees the line I'm pointing to. That was the futures market on the night of the election. Now, what happened? Well, what happened is the market likes things to go as planned, and the market does not like it when things do not go as planned. They don't like surprises, okay? Coming into the election, pretty much everybody thought Hillary Clinton was going to win. And around 8, 9 o'clock that night, when the returns started coming in state by state, and Trump started winning all the key wall states, the on-the-wall states, and started turning it around and started winning the Electoral College, people got scared. The markets got scared. The Dow Jones was down 750 points at midnight on election night. But you know what? People finally realized, well, it doesn't really matter. Okay, this is a big surprise. This is not what we expected. But you know what? Trump's probably going to be good for the economy. And by the close of the day after the election, that Wednesday, the market closed at a profit up here. And it's been going up ever since. This is the S&P. It's the same thing. This is the NASDAQ. It's the same thing. Okay? To show a funny one, you know, without making any racist remarks or whatever, everybody made a lot of comments. Trump made a lot of comments about building a wall to keep out the Mexicans and all that crap, right? Here's a chart of the Mexican peso against the U.S. dollar. Look at that big down day. Guess what day that was? That was the day after Election Day. The peso got crushed. The peso went down to 45 cents to the dollar before it finally just bounced back up a little bit. Everybody thought, you know, there was going to be a lot of tension between the U.S. and Mexico. The Mexican peso was not a very smart investment at the time. So the peso got killed that night. Just like the U.S. stock market went up, the Mexican peso as a foreign currency went down. The bond market went down hard that night of the election. Again, the fundamental reason being Trump wanted to jumpstart the economy. He was going to get rid of Janet Yellen and the easy money policy of the Fed. He was going to raise interest rates. And if you raise interest rates, that lowers bond prices. So bond prices sold off pretty hard. And since the beginning of this year, they've just sort of been going sideways. Actually now starting to go up a little bit. And if we get back to my original entry rule, we're very, very close to, we had a nice short trade in the bonds since the election. We sold them right about 160 over there on November 8th. Rode them all the way down to about 149 or so right there. The market finally went higher than the highest high of the past 10 days. That's where we covered our shorts. And now we're at the point where if the bond market goes above 154, and right now it's at 153.13, so we're only half a point away. If we go above 154, we're going to go long bonds. And you will see that on the nightly orders chart, which I'm going to show you in a minute. So that's basically our trading style, whether it be a commodity crop like cocoa, or a currency like the Mexican peso, or a stock, or a bond. It doesn't really matter. We trade all things the same way. Follow the chart. Buy when it's going up. Sell when it's going down. Exit when you either lose a certain amount of money or when the trade eventually turns around on you. Sometimes it'll turn around for a loss, sometimes for a small profit, sometimes for a medium-sized profit like this bond trade, sometimes for a big profit like cocoa, which is still going over $10,000 a contract. And you never know where you're going to get out, but you don't need very many big winners a year, and you'll wind up having a winning system. Okay? I'm going to shut off the charts for a minute, go back to showing you what our nightly orders look like. We send out nightly orders. I have a guy who's sitting next to me at the moment. He runs all this on TradeStation every night between 5 o'clock and 6 o'clock. After the markets close, we send out nightly orders telling people what to do the next day. I know you lost my screen because I said I'm going to shut off the camera for a moment. Okay, now we're back on. And you should be able to see an order sheet. It says orders for February 9th, which is tomorrow, which literally Steve just printed out 10 minutes ago. Okay? And this got emailed out to all the customers. It got emailed out to all the brokers who auto trade for all the customers. And it tells you, okay, there's 5 pages on this order sheet. We took a lot of time and effort making this very comprehensive and simple to read and follow. Okay? This is the first page. It shows all the positions we have. These are all the different symbols. If you don't know the symbols, don't worry. Your broker will tell you or your marketing guy will tell you. Just to give you a few of them. ES is the S&P. NQ is the NASDAQ. YM is the Dow Jones. We're long all these markets. Here's Cocoa CC. That's not right. Oh, yeah, that's right. We don't have on my private sheet, I have a column that tells me how much open profit or loss there is on every trade. Okay, right here you've got the entry date, the symbol, how many contracts long or short based on $1 million, just because TradeStation, which is the computer program we use to run it, we round off everything to $1 million. Obviously, not everybody has that kind of money. So I figured out how to adjust for that also, which I will get to in a minute. And then we have the entry price, which is where we got in, and the last price, which is today's closing price. Cocoa, for example, we got in at 25.80, and it's down to 20.11, which means we've got over 600 points just in this May cocoa trade, which is going to be $12,000. I know I can't send this sheet out to people because the NFA gives me a hard time about it. But I know, for example, there's a column here that tells me how much each one of these markets has made or lost on a day-to-day basis. So these are all long positions. These are all short positions. These are all positions we don't have a position in. Like I said, we're flat bonds. We might be buying them tonight or tomorrow. Okay? The only trade we did, second page, filled orders. The only trade we did today was we bought 10-year notes, which is similar to bonds. They made it break out the chart, which I'm not going to really go back to because it looked like a bond chart. But we bought the 10-year notes, very similar to the 30-year bonds. The rest of the second page, these are all the exit stops. All of these stops correspond to the open positions on the first page. All these markets that were short, bean oil, cocoa, dollar index, this is where we're going to buy to cover. This is the price. It's either going to be a 2% loss or it's going to be when the market turns around and goes 10 days against you. Some of these have locked in profits. Some of these still have money at risk. All of these where it says sell, these correspond to all the long positions on the first page where we're going to exit. If they turn around and go down, this is the price we're going to sell them at. Okay? Page 3 and 4, these are all the markets that were currently flat. We have potential buy signals when they're going to go higher than the highest high in the past 20 days. We have potential sell signals on all these markets when they're going to go, or if or when they're going to go lower than the lowest low of the past 20 days. And this gets sent out every night. This is just all the list of markets, what the symbols are, how much a tick is worth, so you can follow along if you want to. But this gets sent out every night, goes to all the customers, goes to all the brokers, and people can follow along. And that's what we do in commodity futures. We've been doing it for, well, I've been doing it for 30 years. I've been teaching other people to do it for about 20 years now. Okay, I'm going to go blank. The screen has gone dark for a while. We're done talking about commodities. Let me get the turtle back up just so you guys can remember what I look like. Okay, there I am. I haven't changed in the last 45 minutes. About 10 years ago, somebody came to me and said, you know, foreign currency futures are all the rage. Why don't you develop a turtle system that's based on Forex or foreign currencies? And I had been trading foreign currency futures markets like the Swiss franc, the Mexican peso, which I showed you before, the Japanese yen. I'd been trading all those for a long, long time. And so it was very easy for me to come up with a turtle-based system based on Forex, foreign currencies. A little bit of the rules are different because foreign currency markets are cash markets, which trade 24 hours a day. So the entry and exit rules are slightly different. But the basic premise is the same. Be a trend follower. Don't worry about what Prime Minister Abe in Japan or Prime Minister Merkel in Germany is doing or saying or anything else. Just look at the chart, follow the trend. If it's going up, you want to buy. If it's going down, you want to sell. And that's all you want to do. Okay? There are about 8 different currency pairs that we trade. And I have a chart. Here are the different currency markets we trade. The pound, the euro, the Swiss, the yen, the New Zealand dollar, the Aussie dollar, the Canadian dollar. All right, if I wanted to look at a chart, for example, here's a chart of the New Zealand dollar. It's been choppy most of the year, but recently it's been going up. We've been long for about a couple of weeks now, since right about the beginning of the year, I'd say. We've got a small profit in the trade. Whether or not it's going to keep going, it's at 72 cents to the dollar. It could keep going up to 80 cents or 90 cents, or it could turn around and knock us out for a loss any time now. Again, we don't know. We have the exact same rules. We just follow along. Same thing. Okay? We have a separate system. We have a separate nightly order sheet for the Forex markets. It looks very similar to what I had up a minute ago for the commodity futures. It gives you a list of all the positions, where we got in, where we're at right now, where our stops are to get out, where our possible new entries are for markets that were flat. And it's basically the same thing. It's a different program, it's a different system, but it's based on the same turtle concepts. Okay? Now, we have another program. Again, just because I've been doing this for a long time and I developed things over the years. I'm not great at doing research, but I'm good at hiring people who know how to do research. Somebody came to me a couple of years ago and said, you know, a lot of people like to trade options. Why don't you develop something for options? And options was always something very difficult for me. Richard Dennis never taught us about commodity options. He felt they were too difficult. They were illiquid back when we first started trading. But options have gotten a lot more liquid in the past few years, especially options on commodities and options on ETFs. We're back to looking at a chart of the QQQ, which is the ETF for the NASDAQ stock index, which we're long. And we developed, or actually somebody developed, an options trading system, which we call Turtle Options. And it's basically the same thing. And to give you a real 30-second explanation of what Turtle Options is, we look at the charts, we look at an ETF. It's easier to do ETF because they're a lot more liquid than futures. So we look at an ETF chart, and if the market makes a higher high than the past 20 bars, we want to buy calls. And if the market makes a lower low than the past 20 bars, we want to buy puts because we're betting on them going down. After that, we have the same basic rules. Get out if you lose X percent of your money. Get out if you lose 2% of your account, or get out if the value of the option gets cut in half because there is some time deterioration. Or else just hold on and hope it turns into a big profit. And once it doubles, if we get that lucky, then start getting out when it looks to turn around. So that's how we trade turtle options. Buy calls or buy puts if the market's going up or down. That's how we trade foreign currencies, total forex. We buy the currency futures pair. If it's going up, we sell the currency futures pair if it's going down. Same exact rules as the commodity system, which is my bread and butter from 33 years ago. Just slightly different rules, slightly different manuals, slightly different programs, all of which come with a manual explaining everything and a DVD if you like. And finally, we also trade stocks. One of my programmers about 15 years ago developed a program called the Balanced Trader. It basically just looks at stock indexes, doesn't look at individual stocks because there are way too many individual stocks. You know, I look at 40 different futures markets. I look at 30 or 40 option ETFs. I look at maybe 10 foreign currency pairs. There are literally hundreds of stocks. Even if it took me a minute to look at every chart, it would take me all day long. So basically all I do is I look at the three major stock indexes, the Dow Jones futures, the S&P futures, and the NASDAQ futures. Now the Balanced Trader for stock indexes is different than the rest of the turtles. This was developed by a friend of mine who I originally knew as a card player, and he also became a good trader and a good computer programmer. And he developed a system that basically picks bottoms in stock markets. The stock market has an overall bias to the upside, as we all know, or as we all should know. And the Balanced Trader basically, when there's a big sell-off in the stock market, as soon as we see a little bit of strength in a turnaround, we jump in and go long. The past 2 months, and actually the past 5 or 6 years, you know, the stock market has more than doubled, almost tripled since it collapsed in 2008. And the Balanced Trader has been one of our best performing systems. It outperforms buy and hold because you're not in the market a long time. You're in the market, on an average of maybe a week to 10 days, maybe once a month. And that's it. And you just get in and out, grab your profits, and then sit on the sidelines and wait for the next trade to come along. So basically we have 4 different programs. There's original Turtle Commodities, Turtle Forex, Turtle Options, and Balanced Trader for stocks. Each one of these programs, I teach a seminar. I used to travel all around the world teaching seminars. I've cut back a little because I tend to stay home and do more trading now. So the last time I taught a seminar, which was several years ago, we basically just tape recorded the whole thing, put it on DVDs, and now we have a marketing firm. I have a marketing firm called Farnsfield Research, which is helping promote this webinar right now. And they are responsible for marketing the DVDs and the systems, the manuals, and the seminars that I used to do. And if you contact Farnsfield, or actually I think they probably got your name and contact information, so they will probably be contacting you after this is over to see if you're interested in following up and wanting to go a little more further and a little bit more in-depth to get into 1 or 2 or all of the different systems I trade. They've got a good marketing structure, they've got a good pricing structure, and they will talk to you about that. Farnsfield Research. If you have any questions about anything, I'm pretty much done. I've gone through my hour. If you have any questions about anything that I've talked about, you can contact Farnsfield, www.farnsfieldresearch.com, and they will answer all your questions. I just don't have time at this point to do a question and answer session because We've got a couple hundred people here. I could be here all night. But the guys at Farnsfield have been marketing my programs for years, and they know all about it. So they will answer your questions if you contact them or if they contact you. The last thing I want to talk about before I leave is that, let me see if I can find it. The screen's going to go dark for a second, but I'm still here. I'm going to be teaching a seminar next month in Los Angeles. I'm going to be teaching a seminar. It's called the Final Turtle Tour. I think that's a cute name for it. Well, I can't get the website up at the moment, but again, Farnsfield will tell you about this. I'm getting old, believe it or not. I'm not going to tell you how old I am. I've been doing this for 33 years, so that'll give you some idea. And I'm getting tired, and I just want to sit and trade and have a good time. But I haven't taught a seminar in about 7 or 8 years, I think. And I really want to do one big final seminar. It's called the Final Turtle Tour, just like Black Sabbath or the Eagles or the Rolling Stones, except this is going to be my one and only final tour. I'm not going to do another final tour next year. This is it. But here's the kicker. Because I used to always do seminars, I would do a commodity seminar, I would do a Forex seminar, I would do everything, different seminars at different times. Next month in Los Angeles, I am going to do a seminar, and I am going to spend a whole weekend talking about all 4 systems at once. I'm going to educate everybody on the commodities, the foreign currencies, the options, and the stock indexes. All 4 systems in one weekend. And that's going to be a hell of a seminar. I've never done that before, talking about so much stuff at one time. I'm getting excited about it. I think a lot of other people are getting excited about it. Farnsfield Research is in charge of the promotion, and they're going to be signing people up. It's the weekend of March 17th, 18th, and 19th. It's going to be at one of the hotels at Los Angeles Airport. I'm going to fly out there, and I'm going to give you guys a big final farewell. Everything I've learned and figured out and done in the past 30 years, all crammed into 2.5 days, and that's going to be Russell Sand's Final Turtle Tour seminar. And if you're interested in that, again, Farnsfield Research, you can call them or they will call you about either one of my programs individually, about my seminar next month, about some kind of a package where you can buy 1 or 2 programs and attend the seminar, or maybe you can pay to attend the seminar and get 1 or 2 of the detailed package programs thrown in. I'll let them explain that all to you. They handle all the marketing. All I do is sit here and pick the trades. Okay? So, believe it or not, I'm about finished. I was told I had 1 hour to do this. It's exactly 6:30. I've been talking for exactly 1 hour. And guess what? I finished on time. So, I guess I still got the hang of this, about how to trade, about how to time myself, about everything else. I hope you guys enjoyed it. I thank you all very much for coming. Again, if you have questions, contact Farnsfield. They will answer your questions. If for some reason they don't have an answer, they will contact me and I will tell them and they will get back to you. So one way or the other, you guys will get covered. So thanks to Online Trading Central. Thanks to Farnsfield Research. Thanks to Kevin Driscoll, who just made a bunch of applause go across the screen. And I'm pretty much done. I'm waving goodbye, but you can't see me because there's no webcam. You can only hear my voice. So I'm done for the day. Once again, thank you all for coming. And it's time to say goodnight. I'm going to shut off the microphone now. Bye-bye.